Google is doing a 20-to-1 stock split.
Okay, stock split.
Kind of cool. Kind of cool.
Now that's what Tesla did like about a year ago.
Yes,
Yeah.
not 20, but yes.
Yeah, no, it was like 4-to-1.
Mm-hmm.
And Apple did the same thing of like 2-to-1, or maybe I got those reversed. Some along the lines of that.
I think Apple did 4, and I think Tesla did like 5.
20-to-1.
Yeah. So that would be
That sounds like a
2,900
lot.
divided by 20. If based on today's closing price, they would drop to $145 per share.
And if you owned one, you would now have 20.
Yeah, but that doesn't.
I mean, it's the same. It's the same value. Yeah, it's like
people don't understand that.
Yeah. So my professor was actually talking about this the other day. He was talking about if you have a pizza and you cut that pizza into fourths, you have 4 pieces of that pizza, right?
Correct.
Now, say more people want it and you cut it into eighths. You can give more slices out to people, but did that pizza get any bigger?
Nope.
And the answer is no. Google's not like your shares are worth the same. They're just more of these shares. There's more slices of pizza.
Right.
That's a little thing to, people get confused about these stock splits.
They do.
There you go.
We've explained this before, and I think the example was you have a $10 bill and you don't want that $10 bill, so you exchange it, you give it to your mom, and she gives you 2 5s. Same thing, same amount of money.
Why don't I remember that at all?
Yeah, no, we said that.
I remember talking about stock splits because it was in the news, but I don't remember the dollar. It's the same exact thing though. Yeah. Pizza, dollar, stock split, all the same thing. Also in the news, Facebook, aka Meta, Snap. I was looking into Snap and I didn't know it was earnings, right? Yeah, oh my God, they're up 50, they're up 60%.
What?
They are now up 60%. That was like an hour ago. It was like 20. I just looked at that. We're recording on Thursday, February 3rd.
Damn, Snapchat going off, man.
At roughly 8:00.
Snapchat going nuclear, dog.
Jesus. Dude, that's well, the thing is, it's only about a 25% net gain. I don't know if you can see it because during the day it dropped by roughly 25% and now it's up by 60%. Imagine oh my Lord, imagine the options on that. Some people made some money and some people may be living under a bridge for the rest of their life.
I'm gonna say most of them lost money.
Wow. Volume was 369.
Give it to me one more time.
5 times.
I'm chill.
Did you just sing?
Nah.
Yeah. I was trying to do the math. Anyway, Facebook as well.
Yeah. Down
and that
26% in one day. Wiped away $230 billion worth of market value, which is the most in history
of Facebook or history of history
of the stock market. A one-day drop in value that is the most ever.
Thank you, Robinhood. The stock has recently experienced elevated volatility. You don't say, because that has jumped by 27 million average to now 190.
Yeah, a lot of selling.
Just on the day.
A lot of selling. You got to remember, Facebook is indexed. So people that buy index funds, pension funds, all those big, all the big money has Facebook. So they saw that earnings report. They saw that Meta is costing them a lot of money, which for some reason Facebook said that was going to happen. Yeah, people didn't believe them. Facebook said, yeah, it's gonna be a lot of capital expenditures. It's gonna be a lot of expenses on our end. And people
for Meta?
Yeah.
To transition?
Meta lost $10 billion this quarter.
Because of the transit, what is that from branding and it's just going into a new company, like new things?
No, I'm saying the metaverse, like them creating the metaverse, lost a net loss of $10 billion. And that loss is increasing, by the way. A couple of years ago, it was like, it was like It's increased. It was like 4, then it was 6, and now it's 10. So it's going up, which you don't
All
want.
right. So on the flip side of that, have you done a valuation on them? Would you consider doing a valuation on them?
I have. Would you like me to share my screen, Maxwell?
Well, I'm just saying, like, it's at lows equivalent to 2020, you know?
I'm sharing my screen, Max.
Oh, look at that.
Okay. So I have done a valuation on them. Okay. And actually, hold on, Max, look away real quick. I'm going to delete, look away, look away, look away, look away, look away. Good. All right. I'm going to delete all of this right here.
Okay. Well, I'm looking, but yeah.
And I want you to give me the assumptions of revenue growth. You see the 10 years, 40%. You see the 5 years, 32%. You see the 1 years, 30%. So give me a low assumption, a medium assumption, and a high assumption.
And for the viewers, this is just random. Yeah, correct. It's just kind of how I'm feeling.
This is just a guess without you doing any research. Just a quick valuation to see if you should do more research into Facebook after this.
Okay. Low, I'll go a little bit less than the 1 year. So what, 25%? 5% discount of the 1 year.
All right.
Medium, let's just go smack dab in the middle at 35.
High.
And then we'll go I'll go the same exact direction. We'll go 45.
45. Now those are big, Max, and I want you to see why they're big. So you see this revenue growth? You're projecting Facebook to hit $1 trillion in 10 years in revenue. In the medium growth, you're expecting him to hit over $2 trillion in revenue.
What is it at right now?
It's at 112 billion. And just to give you an idea, Walmart.
Holy Jesus Christ.
Walmart has the most revenue, and it's only 500 billion. So.
Okay. Wait. Yeah. Okay. I wasn't fully grasping the situation.
This is why
I didn't know what they started at.
This is why I like my my template, because you get to see what the revenue is going to. You get to see all of your assumptions and what they're going to end up at.
And we literally just talked about this. Facebook isn't exactly new, but it's really it's I wouldn't say it's past its growth stage, but it's closer to getting out of the growth stage than it is the beginning.
Right.
And what that means is the growth stage has a lot of revenue growth, all this kind of stuff, like way more than the typical. And then as you go on in years, the growth kind of evens out, levels out, plateaus, and drops. So
grow the bigger you are. And they're before today, they were a $900 billion company. So they're big.
So yeah, I didn't take that all into account when I gave you these assumptions.
Now you know.
So let's drop all of these
Let's drop them
substantially, because I'm saying low would 5%. I say 5%.
That's a little low.
Or we're too low now.
Let's do this. Let's do 10%, 15%, and 20%. Okay. And these are just, like I said, spitballing. A lot lower than previous. Okay.
This is a lot more realistic if you look at the numbers as well.
Yeah, exactly. Instead of 4 trillion, they go to 700 billion, which is a lot.
It's still a lot, but that's the highest. That's the best. That's literally all goes well.
Right. Okay. Profit margin. Like we just said, with the metaverse, it's eating into a lot of their profit. However, remember when I said the metaverse lost them $10 billion? If that even breaks even, that's a $10 billion gain for them.
Right.
Okay. So profit margin, let's go. They're 10 years, 27, but it's increasing. Let's go 25, 30.
Right. I'd be somewhat optimistic on this, just because you can't withstand a $10 billion loss for a long time. And they just implemented a whole new thing, a whole new aspect of their company. So it's not like, it's almost like, knock on wood, but like what can go worse? Like you're literally changing your branding, like your direction of your company. So it's like, it's not rock bottom, but like it can't get, you would assume that it can't get much worse.
Mm-hmm.
That's the way I look at it.
Yeah. I think these are pretty good. I think 25 is low. Obviously, you want to go lower than, you want to go low. It's your low assumption for a reason. Medium, you average 35 and 28, you get 30 roughly, and then 35 on the high assumption. Free cash flow margin. 30, 33.
I don't know
30.
as much about this. This is just money to do whatever, right?
Well, free cash flow margin is just, as you can see, free cash flow divided by revenue. It's basically what their sales. It's how much money they actually have in the bank in compared to their sales divided by.
Yeah,
revenue.
right.
So yeah, free cash flow they can reinvest in the company, which they have been.
Yeah,
They
can do
buy back
dividends as well.
shares, They can pay dividends. They can make acquisitions. they can
It's
do a lot of
basically it's simplest term. It's just leftover money, sort of, kind of, if you want to look at it in the most simplistic way. Yeah.
I mean, it's pretty consistent. So let's do
Right. And leftover money is good because if some kind of big thing happens, like now a $10 billion loss, you want to have somebody in the bank to have a cushion.
You know, Max, let's do this. Let's make it the same as profit margin so the numbers come out the same so it's not confusing for people. Change, I don't even do this anymore. So we're going to keep that at 0.
Yeah. That'd be like buybacks or,
Or,
yeah.
offers.
What's the opposite? Yeah.
Price to free cash flow multiple. Now, this is lofty. Right now, I'm not sure it is right now, but right now their PE is 16. So let's be conservative. And let's say Facebook has a very big moat, big competitive advantage. They have like 2 billion active users. It's something stupid. So let's do 20, 22, 24. The market average is 16. Facebook is Facebook. So we're going to go a little higher. We'll do the same thing. 20,
That's true.
22, 24. Let's do a 10% rate of return. So based on these assumptions, high, you are at a 70% margin of safety.
Jesus Christ. That's if you just fucked up everything, huh?
Right. The high assumption is my most bullish.
Yeah, but I'm saying margin of safety, it gives you 70% cushion.
Right,
Like that's
right,
if your calculations are just completely off and you still have 70% cushion.
Yeah, and look at I would not be shocked. And this isn't even like insanely bullish. Facebook getting to $695 billion in revenue in 10 years. Yes. I mean, that's crazy, but
even the low is it's just a bit over doubling ish.
Right.
And it's a little bit more than that.
I like to look at the medium. That's my most that's like my level-headed assumptions is the medium. So
where's it say price?
Buy price per share for Facebook.
Okay, I see it now.
Medium assumption, $416 with the margin of safety, 50% margin of safety means a half off purchase. It's 208. Right now it's offering you a 43% margin of safety.
Yeah, it's not that bad right now. It's not looking bad.
If these are correct, which
right, but you have your margin of safety to protect for that.
Exactly. So it's looking it's looking intriguing, I must say.
Looking kind of tasty, you know?
I must say. However, right now, I'll show you my buy price. I want it to get to like 200. If it got to 200, which is around the 50% margin of safety at 208, if it got to 200, that'd be amazing. I don't know. I don't know if I would buy it right now.
And PayPal, you wanted to talk about PayPal.
I did want to talk about PayPal. Also, just like Facebook, bad earnings dropped 26% in one day, man.
I missed that.
I don't know. Just think about this and see if this sounds rational to you, okay? A bad earnings call equals we're going to cut a quarter of the value of the company. We're just going to get rid of it. Just from a bad earnings. A bad quarter.
I don't report. You gotta this is kind of off topic, but kind of not. It's what what they teach you in school, the efficient market theory. That the market is rational and everyone has the same information. So everyone's making the same decisions based on the information that they know everything.
Yes.
That's in a nutshell, that's the efficient market theory. Basically, everyone knows everything and they're making rational decisions based on knowing everything. Why the hell they teach that in schools is beyond me, because we got Jim Bob Jones over here just heard something about Facebook and bought it and put their whole entire mortgage on it. And then you got the opposite of selling a substantial amount of shares. I don't know if it's rational. Actually, it's not rational.
It's not.
Actually, I do know it's not rational.
Hey, the efficient market theory, that shit no one should ever talk about that ever again after what happened with GameStop. And
No.
all those like it's so obvious that it's not true.
The only thing that I will say to EMT, efficient market theory, the only thing I'll say to EMT is that maybe back in the day when only the big wigs traded stocks and there wasn't computers automatically buying and selling things, and it was on paper, and everyone, like, there wasn't that much money being pumped into these stocks, then maybe at that point, the efficient market theory was true.
Mm-hmm.
I think that has outgrown anything in the stock market, society, schooling, whatever you want to call it. Now it's just, there's too many people, there's too many irrational and rational decisions going into it. That's why maybe some people held on it because they were acting rational, but other people saw whatever in the news and thought that, this company's worth a fourth of what it was an hour ago because some odd. It just doesn't even make any sense.
To think about the way you said it.
Like an hour ago,
it was worth 900 billion, and now it's worth 600 billion.
No news in the history of news will just cut a whole entire company in by a fourth, unless every single factory that they owned and all of their data was exploded in some kind of tragic accident. Then maybe, but that's not happening.
Yeah, but so PayPal and Facebook, same exact thing. Bad earnings report, quarterly report.
So all the big time tech companies, our earnings are coming out right now. Yeah.
Yeah. And
Seems like it's like earnings season for them.
Yeah, and that's why you saw Amazon obviously had a very good one. That's why they went up $400 after hours.
And these are big market movers, like index
movers,
So this will reflect in the index, but it may not really be how the economy is moving as a whole.
Yeah, you saw the indexes were down big today, and that was mainly because of Facebook.
I didn't really watch them today, to be honest.
It's scary. It's scary to think about how much influence the technology companies have on the market as a whole, because they're weighted in the indexes. They're weighted so heavily over other stocks. Apple's weighted like 6%. Facebook's weighted like 2%. Amazon, Google, Microsoft, like
it almost doesn't make sense.
I think it makes up like 20% of the S&P 500.
Yeah, but it just doesn't make sense because that isn't a clear reflection, but people make decisions of the economy based off what the index is saying.
Yeah.
So, I mean, I don't know. I feel like we're two young kids with little experience in the market that it's like, what are they doing this for? But I hope there's a bigger reason, because sitting where I am right now, that doesn't make any sense.
Yeah. So let's stick on PayPal, Max. I'm gonna share my screen again.
Go for it.
And I'm gonna show you why I started a position in PayPal.
Okay.
All right.
Oh, look at that! Sound the alarms.
I did start a position in PayPal. So this is just, this is their numbers, their stuff, all that fun stuff. Yeah. All right. Again, get rid of it.
Okay, keep going, because I want to talk about Square and this afterwards, and they can both have something to do with each other.
Okay. All right. So my assumptions, I'll just show you my assumptions. Okay. 15% revenue growth on the low side, 17 on the medium, which is like, it's very, and if you go to this, it's 18, 19, 15, 17, 20, 18, 15. It's very consistent. I'm not looking for companies that aren't profitable that I think will explode in 2 or 3 years. I'm looking for consistent growth, consistent numbers, no debt, it's just smart companies and very easy to understand companies. So like I just showed you, very consistent growth. So I went 15, 17, 20. 20 is very high. Not very high, but it's they haven't done 20. Profit margin, Let's go back to the data. 13%, 14%, a little blip right there. 5%, 13, 13, 13, 13, 13, 20, 20. So it's around, 13. Average it out, it probably goes around 14 or 15%. So 13, 14, 15. Free cash flow margin, show you again. 18, 23, 21, 20, 22, 14, 30, 21, 23, 22. I went, 20, 21, 22.
Right.
It's very easy to do this analysis when the numbers are very consistent.
Yeah, the assumptions are easy.
Yeah, exactly. Price to free cash flow multiple, I went a lot lower. I went 18, 20, 22. Right now, the PE of the company is 31. And this is what I'm assigning it in 10 years, just to make that clear, Max. This is what I'm signing the stock in 10 years, what I think it'll be trading at.
Okay, that's what I was wondering too when I was making those assumptions earlier. I mean, still 10. I didn't know what the time frame I was doing, but
it's not
sense.
right now. It
shows right below. I didn't even notice that.
That's what it'll be trading at in 10 years. So the bigger the company, more likely the lower the PE, less growth, things of that nature. 10% rate of return. And we have it's overvalued on the low side.
Wait, are you looking at 10% return over 10 years or 10% a year?
10% per year.
Okay.
Compounded. Yeah.
Yeah.
So yeah, overvalued on the low side, just fine. I went conservative. The medium case offers with the free cash flow offers of it's nice, 24% margin of safety, and on the high side, it offers a very nice 50% or even 25%. Now, this is what I like to do. This is why I bought it today. So my average price, as you can see right there, is 133.28. If I change this 10% rate of return to 15%. Oh wait, hold on. 12.3%. 12.3%. It goes to 133, which is my average price. I thought 12% was okay. I thought that was good. I thought that was good. And just the fact that I'm being so conservative on these multiples, let's bump it up to what their historic is. 25, 30, 35, 25, 30, 35. Look at that. It goes to 50% on the medium. I mean, it's undervalued everywhere based on those multiples. So you have to do your research. You can't just, plug in numbers,
Yeah, to make it look good. That's what Phil Towns is saying. We've talked about that before.
You can't just make it look good. But I thought, like I said, I made it a 12.3% rate of return. It looked, that's my price, $133. I put a little bit of money in. And then I have second tranche. If it gets to 106, it offers a 15% rate of return. I'll buy more shares. Third tranche, if it gets down to 82, which is the 50% margin of safety price on the medium scenario, that offers an 18% rate of return. And obviously I'll buy more shares. So yeah, PayPal.
Okay, so now that you said that, this kind of connects to the next point. Are you nervous about PayPal and cryptocurrency? Do you think they'll be competing at all?
Yeah, that's why I haven't put all of my money into it, is because I'm still learning about it. The thing with PayPal and crypto is PayPal allows users to not only buy and sell crypto, it also allows users to buy things with crypto. And that's the only platform I know of right now that allows you to do that.
What
to buy things with Bitcoin.
PayPal does that.
Yeah, PayPal. Huh. Yeah, PayPal allows you to buy things with. Well, they offer Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. If you're holding it in your PayPal wallet, and you want to go buy something, on whatever, you just click, pay with PayPal like you normally would, and then you click checkout with crypto, and they'll take the crypto you have in your wallet. They'll sell that amount, $30 worth of Bitcoin for whatever. And there you go.
It's interesting.
Yeah.
I didn't know that. The only reason I bring that up is because I was talking to my dad about Square, because it's getting absolutely hammered. It's about to break $100, I think.
Is it really?
Yeah, it is. It's down like It's either 50 or over 50%.
It's down.
Uh,
It's at 104
yeah,
right now after hours. Like I said, the market's going to go up huge tomorrow just based on Amazon just crushing.
yeah, right. But I'm talking.
Here,
I
Max,
didn't
let
even
me
know it's called block.
let me show
It's
you.
down 54% this year.
Look at that. Look at that.
Yeah,
Oh, Max, from its high, it's down 64%. Is that what we said? Or you said
yeah.
54?
I did the year. Well, Robinhood showed me a different graph. Anyway, do you think Apple could rival Square? Just off the top of your head, a quick yes or no.
Do I think Apple could rival Square
Yeah,
in terms of what?
in terms of just, do you think of anything that Apple could do that could rival Square, like right now?
Well, Square is, when I think of Square, I think of their point of sale, little chip readers. Their
Right.
card
It allows small businesses to become portable and really just manage their finances and actually have people buy what they want from these stores without having to go through all these other different means of paying.
right. So
It simplifies payments.
I think Apple already does with Apple Pay, and they also rival PayPal.
There you go. Well, that's what my dad sent me. He sent me the title is Apple to rival Square by turning iPhones into payment terminals. You have Apple Pay. It's essentially a portable Square that everyone has, because everyone has, I mean, I'd say 90% people, if you have a smartphone, it's going to be Apple, which is also incredible on Apple that they're marketing and they make the friggin' text blue. Like, and if you have green, people are like, what are they doing with the green?
Loser.
You know what I mean? Yeah, like it's I don't even know how it's become that, but it's become that, and you got the Android emojis that just look like off-brand, so like it's like Apple
the
is
Snapchats look bad, it all looks bad.
dude, yeah, it looks like GTA San Andreas. Like it's just it's incredible what Apple has done. And I was talking to my dad, I was like, why does Square keep on losing, like dropping in price? Like it hasn't really changed much fundamentally from what I've seen.
Mm-hmm.
I'm not saying it's because of Apple, but I'm saying maybe it's something to do with it, because you have it eliminates the purpose for carrying around a card. They have a card built into your phone. They have driver's license, IDs, COVID vaccine cards built into your phone now. Like it's just like digital versions of it. And it's like in that same breath, though, I just saw an article that Kathy Wood, I'm not saying she's God, I'm just saying like
God,
she's very, I think she's educated in the realm of this some digital areas. I mean, she's not dedicated her life to it, but she spent a substantial amount of her life to it. And it said Kathy Wood buys up to 62 million in Square and dumps Twitter. I'm sick, because that's why I asked about crypto. She's really big into crypto. I don't think someone who's such an advocate of crypto would also advocate something like Square, if that could rival something, like if crypto could rival something like Square or PayPal or whatever it may be.
Well, I wouldn't hold too much stock into what Kathy Wood does. I'm not saying that because I think she is is too focused on hype or anything like that. I'm only saying that because she trades very frequently.
I'm not saying I'm listening to her.
Yeah, no,
I'm just saying,
sure
like,
she bought Twitter like a couple weeks ago, and then just
I'm just saying it's interesting because she's been on Square for a while, though. I'm pretty sure it's been in her portfolio for a while now. And it's just interesting that she's buying something that could possibly be rivaled by something that she advocates a lot, that is crypto. Because I mean, it's obvious. I mean, unless she is trading it, she doesn't see much competition between the two. Maybe I'm connecting dots that aren't there, but food for thought.
Yeah. I don't know, man. We have to remember that Square also has Cash App. That's their bread and butter, or it will be.
Sure.
And that's what really rivals PayPal. It's just PayPal. Can I give you a number, dude?
Does PayPal own Venmo?
Yeah.
Yeah.
This is what's crazy. Ready for this? Cash App rivals Venmo more than it rivals PayPal. And PayPal is that's just an acquired business that they bought. PayPal has over 426 million accounts on their platform. Venmo has like 50 million and Cash App has like 70 million.
Really, Cash App is more than Venmo.
Yeah.
I don't like Cash App.
I don't
Weird interface.
I don't like it either. But I'm just saying, like, that's how crazy PayPal is. 426 million versus and their little brother is the one that Square is really competing with. Cash App's really competing with.
It's interesting though, because I think PayPal is more of either adult or business.
Yeah, it's all
like revolved.
Like you said,
you don't see us asking for each other's PayPal,
yeah,
to pay each other.
What I like is when something becomes a verb, Venmo me.
That is true.
It's sticking around.
It's like
no one says, "Hey, let's watch a movie." It's, "Hey, let's watch a Netflix."
That is true.
Yeah, and
there's another company that is, oh God, I can't remember it because it's so true. You literally don't even
say
know.
Google it. You don't search it. You say Google it.
Yeah.
Yeah. So when something becomes a verb,
that's crazy.
They've
won.
People say PayPal me too. Hey, PayPal me. Not as much as Venmo, but all I'm
more
saying
business,
is,
but yeah.
PayPal this is why I don't really think Square is it's not. I'm not saying it's not a competitor, but it's not one really, because they're focused on two different types of transactions. Like we said earlier, Square is, it has that terminal, that point of sale reader. PayPal, it's strictly e-commerce. They have this thing called Zettle, and it's their own point of sale thing. I'm not even looking into that. Is
it similar to Zelle?
No. Zettle. It's similar. It's similar to the Square.
Oh, swiping.
Yeah. That's their own.
Interesting.
That's the rival to Square's, terminal thing. But yeah. With crypto, Max, I don't know, man. It's confusing. I think this is what I do think with PayPal. This is why I'm not too nervous about it. They became a thing in 1999, 2000. They were thinking of digital wallets way before digital wallets ever became a thing. So yeah. I think they understand. I think they understand what's going on. They understand where things are going, and I think they're positioning themselves in a very good, way.
Yeah.
So
it's just interesting. I mean, I don't know much about crypto either, but I was like, could cryptocurrency and the blockchain rival these kind of payment services? Because they're dealing with the same thing, and I don't know. I would be surprised. I don't know though.
This is my thing. How do you
like across paths?
PayPal in their platform, they want to create they're calling it a super app, and it would just be everything, payment transactions, credit cards, but they're also looking. That's what I'm saying about crypto. Like, you can't really. What's gonna rival? What about crypto and the blockchain is gonna rival these payment services? Because you have to go through a platform anyways to be able to obtain crypto on the. You know what I mean?
Yeah.
Yeah. So if PayPal, creates their own, which they already have, you're allowed to buy Bitcoin and sell Bitcoin and Ethereum and Litecoin and Bitcoin Cash on their platform, and you can check out with crypto on PayPal's platform. I think they're positioning themselves in a very good spot.
Fair enough.
But I also had those thoughts.
Yeah, I mean, it's just like, I'm not trying to be like, oh, they have competition, but could it be?
Oh yeah.
I could see them crossing paths. Yeah, I could see them crossing paths in some way, shape, or form.
Facebook might be a buy. Start a position in PayPal. Yeah.
Little thumbnail.
I hope it keeps going. I hope it keeps going down. I hope it. Hey, do it real quick.
Thumbnail.
Yeah.
And just put all the cute Facebook buy, Square, sell.
Just all
buy,
arrows,
please buy.
All red and down arrows.
Yeah.
Hey, everyone listening. That audio version, the audio version of this podcast, bro. Y'all like that shit.
Yeah, it's popping off.
Y'all
it's doing better than the YouTubes.
Oh my God, it's not even close. Maybe we should stop posting on YouTube.
I don't know. Maybe just shorts. I don't know, but that's a lot of editing. But
yeah. Hey, we're gonna keep putting this shit out, man. So listen to the podcast on Apple Podcasts, Spotify, pretty much anywhere else. and watch it on YouTube. We don't have social media because fuck that shit. And that's pretty much it. That's episode 44. See ya, baby.
You.